Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top rank stop market timers, and I wanted to let you guys know about our subscription service. We have an annual subscription, $233 a year. We have monthly reports. Just put out our March report earlier today, and we have a monthly subscription which has daily reports which are put out virtually every day, sometimes even twice a day. Okay, we want to get into some analysis here. Give me a second. And we also want to remind you guys to hit that subscribe and reminder and like button on there. And our subscribe video is not wanting to work. Here we go. We'll make that screen big, and pardon me while I get this rolling. There's our subscribe, reminder bell, like, share, and all that good stuff. Okay, thanks for putting up with that, guys. Sorry about the little technical glitch there. We'll get rid of that and move on. Moving right along. And there we go. Okay, again, you can see our track record here of the short-term report. Okay, since we started that in 2018, we've moved our futures trades over to Striker. So if you don't want to sit in front of your computer all day, you can contact Striker. They auto-trade our future signals. Okay, we want to get into the S&P. We want to get into gold, Tesla, and Zoom today. Okay, so let's get right into it with the S&P to start off. And here's our daily chart. You can see everything counts from the fourth wave low. We've got a wave 1 up, a 2 down, a 3 up, a 4 down, and you can see 5 up here. You can see we've got minor waves 1 and 2. We extrapolated out the third wave. Within the third wave, 4 and 5. Okay, ideally we had a 39.96 price target. However, it appears that the fifth wave terminated at 39.50. You can see our retracement levels from that high are 32.78, 30.71, and 28.63. Okay, we can get into from that fourth wave low here. Let me go back to our daily chart. You can see our fourth wave here on October 30. So from that October 30 low, here's where it gets interesting. There's the October 30 low. There's wave 1 up and 2 down. You can see a 3 up, a 4 down, and a 5 up. Okay, the numbers in black are our primary wave count, which says that the market topped here with a fifth wave that ended there. Wave 3. Here is where wave 3 is equal or gains equality with wave 1. Okay, so it didn't. So it is shorter than wave 1, but as long as it's not the shortest wave, it's okay. All right, so this 5 wave here would be shorter than this wave 3 here. Okay, and then you can see we would be coming down here with a 1, 2, and a 3. Okay, we need verification for this bearish count that comes with a drop below this wave 1 high, which was registered on November 9th at 36.46. Actually, it was 36.45.99. Any move below there gives validation to the bearish count. Conversely, in the red, wave 1 and 2 are the same. Wave 3 tops here, okay, instead of 5, and this is a 4 down. It could come to here, it could come lower, but then we get a 4 that would have to stay above, again, the 36.46 high, and then we'd expect wave 5 to go up to our ideal Fibonacci target of 39.96. I want to bring in our Fibonacci time spiral. This is ideal time and dates. You can see that our time spiral that I started back in September of last year, called alternating highs and lows into the fourth wave low on October 30th. From that low, it has called internal wave 1 high, internal wave 5 of 3 on 126, and then the 216 high. We had a turn date on the weekend of the 13th, which was a Saturday. Sunday was the 14th. Monday was the 15th, but it was a holiday, okay? You can see our time spiral here, and that is a plus 21 days from the ideal time on 124. The next date in the spiral is April 23rd. I went into detail about that in our monthly report. Hard to say that the market could go up. Ideally, if we marry price and time, it tops at 39.96 on April 23rd, but it's hard to imagine it would take that long. February, March, April, 3 more months to make up that price target, but it's out there. We put it on the table just to see what we're going to get out of that, okay? So there is both the bearish and bullish scenario. The market's going to prove out one way or the other. We just have to wait for it to reveal itself. Let's see. We can get, I think, even into that January 29. There we go. And I think I had that a little different here. Here's that January 29. There's the January 29 low. And you can see we've got a 1 up, a 2 down, a 3 up, a 4 down, and that fifth wave. And then you can see a series of 1s and 2s here. We've got a 1, 2, 3, 4, 5. And you can see that there's an overlap there with 4 to 1. That is a leading diagonal triangle. And then you can see that 1, 2, 3, 4, 5 is a fractal of the larger 1, 2, 3, 4, 5. This is a very beautiful picture of a fractal within a wave. So our wave 1 of 1 degree is the same exact pattern as the larger degree. I've got that in more detail here for you guys. Let me see if I can find that. We'll get into Tesla later. Here is that from the 129 low at 36.94. You can see 1, 2, 3, 4, 5 up. You can see that fifth wave is an ending diagonal triangle. There's 1, there's 2, there's 3, there's 4, and there is 5. 4 overlaps 1. So it's only fitting that if the market did top on February 16th with an ending diagonal triangle, that it would start the decline with a leading diagonal triangle. And you can see the 1, 2, 3, 4, 5 here, which makes 1. And if you can see this, this is 1, 2, 3, 4, 5, which makes the larger one. As you can see, this wave 4 here goes into the price territory of the 1 down right here, and this fourth wave does the same. It's near the wave 2 high in both cases. In both cases, it made a near 786 retracement. As I've mentioned in earlier videos, they like to do that before a big wave down, and we call this in advance. Before a big wave down, they throw a big wave up to get all the shorts out of the market. Of course, then they take it down and pull the rug out from under you and say, oh, you were right, but too bad you got stopped out. So, and it goes both ways. They do that on the way down, too. On the way up, before a big move up, they'll take a big wave down. And you can see it right here. Here is the big move up, and before it, the big move down. Okay, so we might expect something here in a second wave, and here's our targets here. If this all is wave 1 with a 1, 2, 3, 4, 5, if they're going to take it down in a huge wave 3 of minor degree right here, then here's our targets at 618 and 500 is 38.90 and 38.71. I wouldn't be surprised at all if they ran it up even higher. We'll see what this week brings, but that's what we're looking at. From this current second wave high, it's not labeled right here. Wave 3 gains equality with 1 at 3,700. And it's interesting how they usually don't work out in round numbers like this, but it gains a 1.618 Fibonacci multiple at 3,600. So we'll see. We could have some more wild swings, people getting whipsawed in and out of the market. Wouldn't be surprised to see a big move up followed by a big move down, or they may just take it straight down. We have to watch every tick and be careful. This is a 30-minute bar here. Okay, what else do we have on our ticket for today? See, I wanted to get into, here is that same thing. Here's the fractal within the fractal, the 5 that makes a 1, and then the 5 that makes a 1. This is a 1, And I think this is here where we got our targets. Yeah, 3,700 and 3,600. Let me see if I got anything else on the S&P here. We showed the trading accounts. There is another count I wanted to show you guys, okay? Where if this is one down, there's two. We can see that we can get a 36.95 target. That's really close to the 37 target. So that's the same thing. And here's our retracement levels of this 5-wave advance. That's for the bullish count. If this is still 4, it would hit one of these targets. It already hit the 500, not quite the 618 yet. So there's a lot of differences in how high and how low this market can go. You really got to be careful if you're trying to trade this market. Okay, let me see. Was there anything else in here with the S&P? We've got gold. We've got Tesla. Okay, let's get into Tesla. Okay. Let's see. Boy, this is, I apologize for the speed or lack thereof. We'll get this to load up, or we'll just go right into our Tesla chart. Here we go. And you can see here's a Tesla daily chart. And we want to knock this other stuff out. You can see we had that 4th wave triangle here and a 5th wave up. Okay, and we expected a lot more than that 5th wave up. But that's all we got, and since this went lower than that 4th wave, that tells us that that is done. That 5th wave up is done. And you can see Tesla put in a first 5 waves down and another 5 waves down. It's gone all the way down. I think it was 615 on that one there. So yeah, we've got a ways to go. This could be just the beginning of that decline. Let me look at this a little closer here. Yeah, here we go from the all-time high. You can see we've got a 1, 2, 3, 4 again. It looks like that 4 overlapped 1, so a leading diagonal triangle in wave 1, and then we get a 2 up, and then we get a 1, 2, 3, 4, 5. This could be wave 3. 4 should hold below the wave 1 low, which is right at 780, and then we could get a 5 down. Okay, I've got 5 down targets here. 552 would be ideal. We can't see a 626 because 5 has to be lower than 3. Okay, so Tesla looks bearish. Tesla looks like it topped. Gold looked like it topped. Let me see if I got that Tesla thing here. I'm getting a little ahead of myself here. Here's Tesla. Here's that leading diagonal triangle off the all-time high on the 25th at 900. The shoot out of the contracting triangle. You can see 1 down here, 2 up here. 3 subdivides nicely, okay, and then there's our 4. There's our wave 4 targets. That's what I wanted to show you guys. So far, it's gone right near the the Fibonacci 500 retracement. It could go to the 618 at 781. This could be an A up, a B down, and then a C up. But the larger trend is down. So again, be careful with this. But we've already gone from 900 down to 615. May not be done yet. Okay, so that's it on Tesla. We wanted to get into gold and then Zoom. And gold, as you may or may not know, broke our make or break level. And we've got a 3-wave decline in gold. Okay, our make or break level was back, well, it doesn't matter where it was. We look like we got a 3-wave decline here. Okay, here is wave A down. Here is wave B up. This is a daily chart. And C gains equality with A at 1644 and a 1.618 multiple at 1448. We moved for our subscribers to a short position in gold once our make or break was broken. You can see this is accelerating to the downside. I think I may have that gold in here. Yes, we do. Here is that. See, gold topped in August, and Tesla topped in January, and bonds look like they topped, and the market's rolling over. Okay, the S&P is probably topped on February 16th, and we'll see when the Dow decides to get along in with the game. But there's your wave A down, there's your wave B up. This is a daily bar, and here's our targets of 1644 and 1448. Okay, let's see. Zoom here. Everything counts from the March lows, except Zoom looked like it put in a low before that, okay? We can see a clear 5 waves up here, and we can see a retracement from there, okay? So from that all-time high, and when did Zoom put that in? October of 2020. Okay, we can see a 1, 2, 3, 4. Wow, we can see a 5 there and an up. All right, let's look at this. Let's look at this retracement and see if we can get an extension between A and B and C. There's A down. There's B up. Look at that. C equals A right at the 618 retracement, right at 263 is that? Yeah, 263. And look at the fourth wave right there, 1, 2, 3, 4, 5. So we look for this to go down to 263, and if C or 3 gains a 1.618 multiple with A or 1, we can see a move all the way down to 124. Okay, is it possible the decline is done here? Yes, but that's going to have to hold that low there. That could be impulsive to the upside. Let's see if there's a lower Fibonacci multiple in there. See if we hit one of them. Usually you get at least 1 to 1. I'm going to throw these in here just to see what it did. There we go. A, B, C. Yeah, it was past the 0.5, but it should gain equality. So we're looking for a move down in Zoom to 262. That'll do it for today's report. Until next time, take care, everyone.